Bitcoin is priced on future expectations of fiat liquidity, period. Bitcoin is the antithesis of fiat. Fiat has no supply cap. Bitcoin is finite. Fiat can be censored. Bitcoin can't. Fiat cannot be audited. Bitcoin can be audited by anybody. And so Bitcoin is the best expression of fiat. And so if there's tightening of fiat liquidity, then Bitcoin is going to be the smoke alarm that shows us that. And so I actually put out a post on X over the weekend where I said, gold making new highs this year shows us that governments and central banks have to print.
The administration hasn't followed through with the stimulus necessary to achieve that goal. This creates uncertainty in markets and uncertainty in Bitcoin, because Bitcoin's value is strongly tied to expectations of future fiat liquidity. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
So the Trump administration came out, we're going to reindustrialize, we're going to print a lot of money and make America great again by bringing back, the way I think about the United States is China has disrupted red America and the internet has disrupted blue America. And they both kind of fight these enemies. And Trump came in and said, we're going to fight China by reindustrializing. And that implies a lot of money printing, a lot of stimulus. And that hasn't happened. And then there was a lot of confusion of, well, how are we going to achieve that if Elon Musk is going to send us into austerity with Doge? How are we going to achieve that if we can't agree to terms with China? And so there's been a little bit of confusion of what side are we playing on, put up or shut up? Are you going to print the money or not? And that's where the confusion has come from. At the end of the day, to me, Bitcoin is priced on future expectations of fiat liquidity, period. Bitcoin is the antithesis of fiat. Fiat has no supply cap. Bitcoin is finite. Fiat can be censored. Bitcoin can't. Fiat cannot be audited. Bitcoin can be audited by anybody. And so Bitcoin is the best expression of fiat. And so if there's tightening of fiat liquidity, then Bitcoin is going to be the smoke alarm that shows us that. And so I actually put out a post on X over the weekend where I said, gold making new highs this year shows us that governments and central banks have to print, but Bitcoin falling from highs right now shows us that they might have a liquidity crisis before they're forced to. And so I think the two assets play different roles, and that Bitcoin is a very accurate smoke alarm of where liquidity is today, or then the gold market is sniffing out where this is inevitably going, right? We know QT is ending, QE is going to have to restart, rate cuts are coming, and there's all sorts of stimulus, whether it's Fannie Mae, Freddie Mac, a housing crisis to be declared in 2026. So I see this as a buy the dip opportunity. The way to monetize a currency failure is to not bet that the stock market's going to go down 50% like Michael Burry and have your fund shut down. The way you do it is by owning a better currency than the dollar, which would be something like gold and Bitcoin. So this is a buy the dip opportunity for me. I think liquidity has to come physically. There's no other option. And this is just a mere reaction to the lack of follow through from the administration.
Okay, that's interesting. I mean, if you know, fiat's tightening this aggressively, shouldn't Bitcoin be benefiting as the alternative, monetary asset? Instead, we're seeing Bitcoin fall almost 1-to-1 with the tightening. How do you explain the disconnect?
Well, Bitcoin has been, and I'm not saying that this is how I value and view Bitcoin, but historically, Bitcoin has been some combination of a hard money alternative, a neutral reserve asset like gold, and technology. You can make the argument that Bitcoin's macro thesis or macro value is that it is technology plus fiat liquidity. And so it's been relatively correlated to the NASDAQ with the properties of gold. And so the market is still trying to figure it out. But the way, again, I would encourage everyone to pull up a US liquidity index chart and a Bitcoin chart, and they're relatively correlated, which is, I think, what we all want. We all want the best expression of fiat debasement, that we all want to own something that is the opposite of someone being able to print time and energy out of a central bank while I have to get up out of bed and work for the currency. And so I think the market is still maturing in its ability to price Bitcoin. Gold is definitely leading in where the world is going. And Bitcoin is acting more as a real-time index in how that progress is working towards the inevitable future, which is we're living through a sovereign debt crisis. I mean, at the end of the day, that's the problem, is that these sovereign nations are in way over their head. And gold is sniffing that out. We're going to have to reprice the world around us in a significantly weaker dollar. And Bitcoin is taking us along that journey. But in part of you're exposed to more volatility with Bitcoin. You're exposed to more of the extremes, but that's to both the downside and the upside. And so, to each their own. I prefer owning the best performer. And so these are buy the dip opportunities for me, and 25% off highs during a liquidity crunch when the government shut down and is reporting surpluses and $200 billion. It's no problem for me.
Yeah.
Large firms like Goldman Sachs or Susquehanna buy spot ETFs and simultaneously short Bitcoin futures to capture a risk-free spread. This inflates ETF inflows, but does not represent true Bitcoin accumulation. These trades come and go depending on profitability. Mallers warns against assuming Wall Street loves Bitcoin just because their ETF inflows look large.
A really healthy cleanse of narratives within Bitcoin. I think that there was a lot of, the narrative was ETF institutional demand. Well, a lot of the ETF flows are the basis trade, is, arbitraging futures with the ETF. And then there was the Bitcoin Treasury narrative, which we can talk about as I'm the CEO of 21. We're not a treasury company. We think we're substantially different than that. But there was this idea that institutions were gaining exposure to Bitcoin through these Bitcoin securities, and that there was an MNAV premium to that. And a lot of that's unwinding, which I think is very healthy. And so I think we'll find a bottom when the market realizes that Bitcoin doesn't trade in 4-year cycles, and that a lot of the institutional narrative was a little bit overblown. But right now people are freaking out. Like, oh my gosh, these institutions, they're unwinding from their ETF positions and they're unwinding from strategies MNAV trade, when in reality, I don't think it was ever really there at the size and scale that it was purported to be and that the narrative conveyed. And that Bitcoin doesn't operate on 4-year cycles like horoscopes, like it doesn't align with the stars. It operates on expectations of fiat liquidity, which is what it was designed to do. And so I think once the market relaxes, calms down, then we move on to this next chapter of liquidity. I mean, we're hitting the bottom of the liquidity cycle. That's what I would say here on Kitco. I'm not going to call any Bitcoin bottoms, but QT ends, it's November 18th. QT ends December 1st. The Fed has said they're going to have to start expanding the balance sheet. Just for context, peak Fed balance sheet, we're at $9 trillion. Now we're close to $6 trillion. That is an insane amount of tightening. Never have we tightened more. People often say, well, if China and Japan sold all their US treasuries, then we'd really be in trouble. China and Japan can both sell all of their treasuries at the same time, and they wouldn't have that much impact that the Fed has had over the course of this tightening cycle. And that ends in less than 2 weeks. And so tightening is over, QE is resuming, rate cuts are coming, and there's all sorts of stimulus that is coming from the Treasury Department, whether it's Fannie and Freddie Mae, deregulation, stimulus checks before midterms. And so I think we're bottoming out in the liquidity cycle. So Bitcoin is really figuring out its identity, understanding that these Treasury MNAVs might not have been the right narrative, that understanding the ETF participants, and I think liquidity will resume, will turn up, and Bitcoin will be the best expression of that. That's the prediction I'm willing to make on the show without you pinning me to a price. There's 2 real core narratives that the market needs to digest in regards to the Bitcoin ETFs. One is this basis trade. So you're seeing large banks like Goldman Sachs or trading firms like Susquehanna, what is reported as massive Bitcoin positions. And maybe they are taking a directional position on Bitcoin, but the reality is they're running this basis trade where they're able to buy the Bitcoin spot ETF and sell the futures on the CME and capture a spread. And if that spread is returning them more than Fed funds, then that is the equivalent of better risk-free returns for these capital allocators. And so what looks like massive ETF inflows is actually also realized as sell pressure on the futures. And so there's been a misguided narrative that Goldman Sachs cares about Bitcoin just as much as I do. I don't think that's true. I think that they're trading a spread and they're making these markets more efficient. However, it is true in other circumstances, like we've seen Harvard. Harvard has one of the largest Bitcoin positions of any endowment in the world. I think it's one of their largest ETF positions within the endowment, period. Now, those positions are real. And the really important part, Jeremy, is there's been more Bitcoin OGs of folks that have been sitting on thousands of coins for over a decade that have been realizing profit. And so actually more than 50% of Bitcoin that has been acquired is underwater right now because there's been a massive rotation of a lot of folks. Almost think of it as an IPO moment where lots of early investors are realizing some liquidity and some gains. And a lot of the folks like Harvard, like firefighter pensions, they are actually using the ETF to soak up a lot of the liquidity. So I would say it's both. Part of the outflows that you're seeing is because the basis trade is no longer returning more than Fed funds. And you see this kind of cyclical wind and unwind, wind and unwind. And you can track that just by how profitable the basis trade is. But what's encouraging is all the endowments and the pensions that are buying for the long term and treating Bitcoin like a hedge against future fiat debasement.
Yeah, interesting. I mean, it's kind of dangerous, right? I mean, we've seen the movie before. When too much leverage piles into a basis trade, it looks like, great, right? And until liquidity vanishes. I mean, you're not saying Bitcoin is kind of exposed to the same structural risks that broke the Treasury market back in 2019?
No, not at all. I mean, these markets are fairly standard and fairly simple, right? You're taking a neutral position on the asset and you're providing liquidity and efficiency to the marketplace. I would argue that it's not necessarily a bad thing. It's good that we have really efficient liquid markets so that, I mean, Jeremy, we saw someone sell 80,000 Bitcoin in one day and the price didn't move. And so it's really good that we have highly liquid markets. That's what you want out of a neutral reserve asset is salability, liquidity. So it's all good. It's just the market needs to digest kind of what's been liquidity dislocation. There's been a lot of campaigning and future promises on printing money, reindustrializing, ending QT, starting QE, go, 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 go. And then we ran a surplus and then the government shut down. And then, well, who's actually net long these ETFs? How important is the basis trade? Well, what are these treasury companies? I see the market just gathering itself a little bit, which is obviously, if you believe in the thesis that currencies have to continue to be debased and the sponge of sorts to absorb the excess liquidity that sovereigns have to print is going to be gold and Bitcoin. This is a great opportunity to add to those positions. I think it's really that simple.
Bitcoin isn't facing the kind of structural risks that once broke the Treasury market. He even points out convincing evidence. Someone sold 80,000 Bitcoin in a single day, and the price didn't move. This is what mature markets look like: deep liquidity, efficient execution, and global buyers ready to step in. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.